OpenAI just offered the US government a direct stake in the future of artificial intelligence. If that doesn't change how you think about AI investing, you're not paying attention. Welcome back to AI Assets. Today we're breaking down a story almost no one is explaining properly for investors. According to multiple reports, OpenAI has proposed giving the US government a 5% equity stake in the company as part of a broader framework where Washington would hold 5% of each leading American AI developer. On the surface, this sounds like politics and public policy. In reality, it is a direct attempt to reshape who captures the upside from the AI boom. And it has massive implications for anyone holding AI exposure today. Let's start with the investor context. OpenAI is not a tiny startup anymore. It is the company behind ChatGPT, a core infrastructure provider for enterprise AI and a central node in the entire AI ecosystem. It has already raised tens of billions in capital and reportedly chased valuations north of $100 billion in recent funding discussions. Now imagine a future IPO or private valuation where 5% of the company is owned by the US government. That 5% stake is not just symbolic. It represents a slice of future cash flows, a seat at the table, and potentially a different risk profile for everyone else investing around the AI stack. If this framework is extended beyond OpenAI to other leading AI developers, think Anthropic, Google, Meta, maybe xAI, you end up with a scenario where the US government becomes a portfolio investor in the core AI infrastructure of the world. For big tech stocks, that could mean new dynamics around regulation, profitability, and capital allocation. Now let's talk about what the market is missing. Most headlines frame this as a way for the public to benefit from AI, or as a political move from the Trump administration to make AI companies share the upside with taxpayers. But the deeper story for investors is about control. Equity stakes come with rights, information rights, potential board representation, the ability to shape governance frameworks and long-term strategy. If Washington owns 5% of OpenAI, it has a direct financial incentive to keep the company profitable and dominant. But it also has the ability to push for tighter safety, export controls, and even restrictions on who can access frontier models. That creates a paradox. On one hand, a government-backed AI champion can feel safer and more stable. On the other hand, investors in surrounding stocks, cloud providers, chip manufacturers, enterprise software are suddenly dealing with an AI ecosystem where the referee is also a shareholder. Another thing the market is not pricing in yet is spillover. If the US normalizes taking equity stakes in AI platforms, other governments will respond. Europe might push for public interest funds tied to AI tax revenues. Asia could pursue sovereign stakes in local champions. Global competition for AI influence shifts from just regulation and subsidies to direct ownership. For investors, that means the AI sector is moving closer to strategic industry status, like energy or defense. And those sectors trade under different assumptions. Now, what happens next? And how can you position smartly? First, this proposal is still conceptual. Reports suggest OpenAI and the White House have had discussions, but any formal arrangement would likely need political and legal. The timeline to watch is the combination of three things: future OpenAI funding rounds and any disclosures around government participation. Finance, Yahoo +1, legislative or policy moves in Washington to create public wealth structures tied to AI, and signals from other major AI players, like Anthropic or Big Tech, about similar frameworks. From a positioning standpoint, here is how to think about it. If governments move toward equity stakes in AI platforms, these platforms become partly policy instruments. That tends to favor companies with strong alignment to national interests, security, cloud infrastructure on domestic soil, and compliance with AI safety rules. Cloud leaders like Microsoft, Google, and Amazon already partner deeply with governments. If the state takes equity in model providers like OpenAI, those cloud platforms could become even more central as national AI rails. For chipmakers like NVIDIA and AMD, the key question is whether government-influenced AI strategies slow or accelerate hardware demand. So far, all signs point to continued massive capital spend on AI infrastructure, even as skepticism about costs grows. For you as an investor, the opportunity is in understanding which companies benefit from a world where AI is treated as strategic national infrastructure, and which ones are more exposed to policy risk and margin compression. The bottom line is this: OpenAI talking about giving the US government 5% of the company is not a curiosity. It is a preview of a new model where states participate directly in AI wealth creation. If you ignore it, you are missing a major shift in how this entire sector will be governed and valued. If you want to stay ahead of moves like this before they show up in stock prices, subscribe to AI Assets. We break down the AI investment stories that matter with a focus on what the market is missing and how you can position before the crowd. And I want to hear from you. Do you think governments owning stakes in AI companies will make the sector safer and more investable? Or does it just add another layer of political risk? Drop your thoughts in the comments. I read every single one.